Good afternoon, good morning, good evening, wherever you are and whatever time it may be. Thank you for watching. Today's show is all about the top 8 frequently asked questions in commercial real estate by investors. So let's jump right in. The first frequently asked question: what is a broker price opinion? You've probably heard of these. These are called BPOs. It is the estimated value of a property based on the research and analysis from a broker agent like myself. It tends to include zoning and tax information, income and expense analysis, property highlights, comparable property listings, and market data. A BPO might be requested by a property owner looking to sell or refinance their property, by an investor looking to buy a property, or by a lender looking to assess a property prior to a refinance or foreclosure. Number 2, what does the term due diligence mean? Due diligence refers to the process of obtaining all necessary information before a property is bought or sold. It can include zoning laws, inspections, property valuation, building codes, history of lease payments, environmental assessments, building easements, and so much more. While the length of a due diligence list varies depending on the type of deal, it's a highly beneficial process for a commercial real estate investor or buyer. Number 3, what is a value add property? A value add property is an investment property that has the potential to increase the cash flow through upgrades that can include interior and exterior renovations, a rebranding of the business, better property management, added security, management restructuring, or the construction of more buildings. Once upgrades are made, investors may seek to sell the property for a profit or keep it as a long-term hold. This can be done by a single investor or by an experienced investment group. So the number 4 question is, how does a 1031 exchange work? A 1031 exchange gets its name from the Internal Revenue Code 1031, which allows a commercial property owner or business to defer federal taxes during an exchange of real estate. All right, so the property must be of what they call like kind, and if so, you may exchange one investment for another without the need to pay the capital gains tax that would normally be paid during a property sale. This allows you to continue growing your investment tax deferred. Number 5, what is positive leverage? Positive leverage occurs during an investment in income-producing real estate when the interest rate on the loan is lower than the cap rate. So for example, if you're buying a property at a 6% cap rate and getting your loan at a 4.5% interest rate, then you have positive leverage. The positive difference increases your return on the cash equity you have invested. Number 6, what is buying on pro forma versus in place? So buying a property based on the pro forma means that you are paying for a property based on some amount of future expectation. Now, typically this has to do with the opportunity to decrease expenses or increase rents because they're below market. Usually buying on pro forma requires a certain amount of work to get the property stabilized, and therefore the pro forma cap is usually higher than what you would pay for on an already stabilized property. Buying on an in-place property refers to taking the current net operating income, or the NOI, and applying a cap rate to determine a purchase price. A buyer may pay a lower cap rate based on the in-place if there is more upside based on the pro forma. All right, number 7, what is the difference between a permanent loan and a bridge loan? A permanent loan refers to a long-term fixed rate loan. These loans are typically granted to properties that have consistent operating histories and are stabilized. Permanent loans are usually fixed for 10 years, but could go up to 30 years. Bridge loans, on the other hand, are normally considered a floating rate, meaning they're not fixed. And that means the rate changes every month based on a spread over an index. These loans are typically granted for up to 36 months and utilized for properties in transition. For example, If a buyer were to purchase a property based on pro forma upside, they might want a bridge loan while they increase rents and reduce expenses. When the property then gets stabilized, they would then place a permanent loan on the property. And finally, number 8, is it better to work with a local or national commercial real estate company? All right, now while you may be familiar with the names of national real estate companies, smaller local companies can present a variety of advantages. It really depends on what your goals are. In today's business climate, with the additional tools of the internet and artificial intelligence, outsourcing to third parties, and so on, the independent brokerage can have just as large of a reach as the national brand. I think it really depends on your broker. My advice would be to find yourself a trusted and experienced broker or consultant with a proven track record to get the job done. If they're one of the best, where they hang their hat won't enter into the equation at all. I want to thank you for taking the time to watch this video. I hope you found it useful. If you would like to see more content like this, please hit the like and subscribe buttons below. If you would like to know more about commercial or residential real estate opportunities in Montana, please don't hesitate to reach out to me. With our years of experience, local expertise, and one of the most aggressive marketing plans in the business, my team and I can help you buy, sell, lease, manage your commercial property or development project. Thanks again for watching, and I hope to see you soon.